What are some itemized deductions? Those are listed on the Schedule A form. So let's take a look. One type are medical and dental expenses not covered by your insurance, but only the amount that is over 7.5% of your income. Susan is healthy and has no medical or dental expenses over that amount, so would record 0. Another type of standard deduction are state and local taxes you paid. Sales taxes, real estate taxes, and personal property taxes. But you can only report the amount that is less than $5,000 if you are single or married filing separately. Susan has $749 in state income tax, so she records that. Another type of itemized deduction are mortgage interest and points, as well as investment interest. Susan rents and didn't borrow for any investments, so records 0 here as well. Another type of standard deduction are gifts to charity. Susan taxpayer donated $925, so records that amount here. Another type of standard deduction are casualty and theft losses. An example would be if your property was damaged during a hurricane or a tornado. Susan had no casualty or theft losses, so would record 0. There are some other uncommon itemized deductions. We won't go into those. So Susan adds these together and has $1,674 in itemized deductions. This amount is way less than the standard deduction of $12,000, so Susan goes with the standard deduction for line 8. Line 9 is for qualified business income deduction. Susan doesn't have any of these. Ta-da! Line 10 is taxable income. We figure that by taking the number on line 7 and subtracting the standard deduction of $12,000. So Susan has a taxable income of $12,997. Now Susan has to look up the federal income tax she owes. Like most taxpayers, she goes to the tax tables in the IRS 1040 instructions that list income categories in increments of $50. She finds the taxable income of $12,997 in the IRS column for single or married filing separately, and guess what? She owes $1,367 in federal income tax. She records that on line 11. Remember, the first 10 people to sign up for the Aspire to Money mailing list using the email information below will receive a copy of the ebook, The Cats of Laughing Thunder Guide for Kids and Money. On to line 12. Susan doesn't have any children or dependents, so has no credits to enter here. If she had had any child or dependent credits, then she would have subtracted them from her tax owed and recorded the number on line 13. If the number was negative, she would still have only gotten to put down 0. Line 14 is for other taxes, unlikely for most people. Line 15 would be the tax from the table adjusted by the child or dependent credits or other taxes. In Susan's case, there are no adjustments, so the total tax is the tax amount from the IRS table. Line 16 is where you record the amount of income tax that has been withheld. In Susan's case, her W-2 shows that $1,599 was withheld for federal income taxes, so she records that amount on line 16. Line 17 is where you record any earned income credit or other credits you may have. Typically, a taxpayer would not qualify for earned income credit without at least one child. Susan has no refundable credits. Add lines 16 and 17 to get your total payments to the IRS to record on line 18. If line 18 is more than line 15, subtract line 15 from line 18. This is the amount you overpaid. Susan overpaid $232, so she records that on line 19. She wants all of line 19 refunded to her, so she repeats the amount from line 19 onto line 20A. On line 20B, Susan records the routing number from the lower left-hand corner of her check blanks from her checking account, and she puts an X in the box called checking. In line 20D, she records her checking account number from the middle bottom of her check. This way, her refund will be transmitted electronically to her checking account. Susan could also have chosen to have received her refund in the mail. Since Susan wanted to receive all of her refund, she doesn't want any of that amount kept by the IRS to apply to her 2019 tax owed. If not enough was withheld from your paycheck, then you may have an amount owed on line 22. If the amount you owe is greater than 10% of the total tax you owe, then you may have to pay a penalty on line 23. Most people don't like to pay extra and definitely don't want to have a penalty. On the other hand, overpaying really isn't a great plan either, as the government doesn't pay you any interest on your refund money. Sometimes they've had hold of that money for up to 15 months. It's best to try to have just a little more withheld than you will owe. But if you're having either too much or too little withheld, you should have a new W-4 form filed with your employer to adjust that. If your life changes during the year, you may get married, then you should also file a new W form with your employer. Congratulations! It's time to celebrate. You survived the Form 1040. Thanks for watching, and please subscribe to the Aspire to Money channel.